And at this point, the chair would now recognize the ranking member of the Subcommittee on Capital Markets, a gentleman from California, Mr. Sherman, for 4 minutes for an opening statement.
And I'd ask unanimous consent that if the ranking member of the full committee isn't here to give her 1 minute, that she can do it after one or all of the witnesses.
So ordered.
This month, we have a series of hearings designed to prevent shareholders from getting the information they want to decide whether to invest and make sure that those shareholders don't affect the behavior of the corporations they own. We prevent investors from making decisions based on any criteria not approved by the governors of Florida and Texas. By depriving them of information, and then this morning's hearing, prevent them from introducing resolutions, and this afternoon, prevent them from getting the advice they need to decide on how to vote on those resolutions. We are told that these considerations are fringe or immaterial, and there are those who say that it is material only if it's 5% of earnings per share. But the Republican witness correctly testified yesterday that what's material, it's what's important to investors. Now, there may be a few unusual investors. Yesterday, I posited the idea of someone who only wants to invest in companies whose boardrooms are painted purple. Those folks do not need to be catered to. But where a material portion of the investment community finds something material, it's our job to get them the information and to allow them to affect the corporate behavior of the companies they own. There are at least two groups of investors. The first I call the Ebenezer Scrooge investors, interested only in earnings per share. But even they need information about global warming. They have to decide whether to invest in the Maldives Coconut Plantation Corporation. And they will get an SEC document that details the risk factors in terms of competition. Coconuts might be grown elsewhere. But if you're going to invest in the Maldives Plantation Corporation, you also need information about another risk factor, inundation, because the Maldives are only 4 feet above sea level. So even the Ebenezer Scrooge investment needs information about the effect on global warming and of global warming on earnings per share. Second, we've got the John Denver investors. This is hundreds of billions of dollars of investment capital that cares what the effect of their investment is on our environment. And if we don't provide them with the information they want, many of them will invest in European companies that do provide that information. And third, what I call the John Bolton investors, those who are concerned about the national security impacts of the investments they make. Now, today we're going to focus on the rules for introducing a resolution, and we have the Republican SEC raise that to you have to be an investor of $25,000 worth of shares for a period of 1 year. I might go along with that, but what I can't go along with is they prevent aggregation. Well, what would this mean in the context of running a political campaign? What if we said any contribution of under $2,000 cannot be accepted by a campaign? So if you can run your campaign with only $2,000 and up, fine. But if you have 100 donors who want to give you $20, that doesn't count. Shareholders who invest $1,000, $500 in a corporation, if there's a lot of them, should count just as much as one investor with $25,000 of investment. We're told that the SEC should, in effect, conspire, collude with corporate boards to keep out of the proxy statement resolutions on certain topics. And look at how these topics overlap. One topic is you shouldn't have something that doesn't relate to the company's business, and at least 5% of the business. The other says you shouldn't have a resolution that relates to ordinary business operations. So if it doesn't relate to the company's business, you can't propose it, and if it does relate to the company's business, you can't propose it. Thank God today's SEC is no longer issuing no action letters that, in effect, disempower all shareholders. We're told that this is about cost. It isn't. This hearing is being held for those who think these resolutions might win, and they don't want to give the shareholders a chance. I'll yield back.
I now recognize a gentleman from California, Mr. Sherman, who is also the ranking member of the Subcommittee on Capital Markets, for 5 minutes.
Capitalism is under attack. If by the sweat of your brow and the forbearance of consumption you accumulate capital and you have the courage to invest, these proposals would deprive you of the information that is material to millions and millions of investors. And if you do become a shareholder, the proposals here would prevent the shareholders from affecting the behavior of the company they own. The purpose here is to blind the investors when they make the investment decision and hog-tie them when they try to affect the company's behavior. Today's Republican Party has recently begun this war on capitalism. Without, as I said yesterday, they are of the same mind now with the centuries-long effort of the Socialist Workers' Party of Leon Trotsky. The gentleman from Michigan says that's unfair, and he's right, because it's unfair to Mao Zedong. Because it takes a Eurocentric view of communist thought and fails to give appropriate mention to East Asian communism. Imagine a shareholder resolution that says the company must de-risk from China, decouple from China, and not sell advanced technology to China. Many boards, probably most, would fight hard to block that from the proxy statement, and two political parties will help them do that: the Republican Party of the United States and the Communist Party of China. We're told we're supposed to protect retail investors, but we're told that if you have $25,000 to invest, you can propose something, but if three people have $10,000 to invest each, they can't. We must have aggregation. We shouldn't just be talking about ESG, ESG, W, and C. The last hearing that I chaired of this subcommittee focused on workforce as part of ESG, and as I've just mentioned, we need resolutions about how companies deal with China, and we need disclosures of the big China risk that so many companies take. Mr. Berry tells us we should rely on states. That's a race to the bottom. Which state needs a few $100 million or even a few $1 million in revenue? They'll allow boards to be entrenched management. I do agree with Mr. Berry that we should allow all flowers to bloom, both red flowers and blue flowers. A lot of people on my side of this issue are not CPAs. I guess I'm the only CPA on our side, and underestimate just how hard it's going to be to really have meaningful ESG disclosures, to ascertain, quantify, tabulate, define, make comparable, and audit numerical information is very difficult to devise that system. We're told that investors who care about ESG are the fringe, and as Ms. Minow points out, they're the winners. Ms. Minow points out the importance of private companies, and we need to require disclosures by multi-billion-dollar companies, even if they're privately held, and not just to the private equity companies that invest. Mr. White puts forward the idea that if you want to be a John Denver investor rather than an Ebenezer Scrooge investor, you're morally wrong somehow, or you're incompetent. You should be blinded and hogtied, and frankly, I don't agree with that. We're told that we've got to prevent inaccurate speech. Everybody who wants to kill the First Amendment says that they're not going after good speech, they're only going after bad speech. The answer from bad to bad speech is good speech, and we shouldn't be censoring political talk, and we shouldn't be censoring what advisors have to say. Ms. Minow, we're told somehow that there's a big cost involved in these things. I remember when creating the proxy statement was very difficult because you had to set the type. We didn't have computers back then. I was at the financial printing office. But I would assume that printing something is now easy. Tabulating is easy. Isn't most of the cost here the cost of trying to prevent by fighting this with lawyers and prevent the vote from ever being proposed?
Yes, that is true. As I said, the costs that they send out are very inflated. Shareholders are limited to 500 words. They can have as many words as they want to respond. They have in-house counsel to respond. in my opinion, it doesn't take more than an hour or two.
So they attack it being fringe, and they say it's expensive, and the expense is the money they get to prevent these fringe proposals from winning. I
Correct.
yield back.
Gentleman, time.